Today, I'm going to be sharing with you guys my put selling only account so that we can demonstrate and reinforce the put selling strategies and concepts that I laid out in the 90-minute masterclass that I'll link in the upper right hand corner right here. If you guys haven't seen that video, I recommend you guys pause this video and watch it first and then come back to this one. Hi, I'm Credit Spread Investing. I retired from corporate at the age of 31 by learning how to safely invest and trade options. And now my new mission is to teach you how to do the same. If you guys like content like this, make sure you guys subscribe and like the video because it'll really help me out and let YouTube know that this is a video worth watching. So let's head on over to our account so that we can take a look at how we implement our strategy and the psychology behind it. So our account is currently sitting around $83,600. We had peaked at $86,000 a couple days ago, and now we've lost a little bit of value. But the account value actually isn't that important. What I want to bring your attention to is the performance. Our year-to-date return is at 23.28% as compared to the S&P 500's 8%. And again, just to remind you, this account is really just selling puts at the moment. In the future, it could be calls and credit spreads, which means that we're able to get this return by just following the strategy that I linked out in the video linked in the upper right-hand corner. So I would recommend that you guys take a look at that video to make sure that you guys understand the strategy, but I'll summarize it real quick. The first rule is that we only sell cash secure puts on stocks that we want to own, which means that we only buy stocks that we can buy 100 shares of. Number two is that we never buy back an option at a loss. And three, we try to roll if you can get a credit, try to target 1.5 to 2.5% a month. But if we can't roll it or if it goes too far in the money, then we have to let the option get assigned and we end up buying 100 plus shares of that stock. So in this video, I'm going to really show you guys the psychology behind why those rules exist and how we go about implementing that strategy. So you can see right here in my account that we have 2 shares of ASML, 3 shares of IoT, Samsara, 9 shares of NVIDIA, and 205 shares of TSM. These 2 shares, 3 shares, 9 shares, and 5 shares of TSM are all stocks that we bought using the credit that we collected from selling puts. We take half of the money and we buy those shares. 200 shares of TSM, those are from the puts that we got assigned, okay? And you can see here, these shares are doing pretty well, up 28%, NVIDIA's up 31%, IoT's down 12%, and ASML, for some reason, isn't showing up, but it's probably down around 1 or 2% as well. Which leads us to how we got the performance. We've collected around $5,227 of total credit in 2025. We had around $10,000 of gains from the TSM shares that were assigned from our puts. And we had around a $460 gain from the stocks that we bought by dripping in our option money. Now, what is more important here is the execution of the strategy. So the first thing is IoT or Samsara. I don't really recommend beginners sell puts on small cap stocks because they're usually unprofitable and more volatile. And I didn't talk about it in the video, but I'll make a different video about this at a later date. But one of the things we did talk about is that we want to buy stocks in situations or sectors that we have an edge in, invest in what you know, right? And so Samsara is in an industry that I used to work in. So I know better than most how this industry pans out, and Samsara is the industry leader in this space. So I feel relatively confident it's a high conviction play for me. So for IoT, I have a $41 put option that is currently in the money, right? I collected close to $300 or so on this one option. What we plan on doing, as according to our rules, is we are going to let this option get assigned if we can't roll it for a credit that equals around 1.5% a month. So let's just do that right now. So if we want to roll this out, and it expires on August 15th, let's just say we want to roll it out to 2 weeks later, August 28th, at the same strike price, give or take. It seems like we can net around $50 or so. The bid-ask spread is kind of wide because it's after hours, but I'm guessing we can net around $50. Which means that we're around a 1% or so for a 2-week rollout, which means that in a month, we're averaging maybe 2% or 1.75%, which is actually a pretty decent roll. So if you want to roll, this could be an option. But what I plan on doing with this stock is because it still has 3 weeks left on. I'm gonna let this option decay out a little bit further and see what happens to Samsara over the next couple of weeks. And then when we come back, or I'll post on IG, link below, we may actually roll this for credit if we're able to. And again, disclaimer, if we're not, we'll let it get assigned. Now moving on to NVIDIA. NVIDIA is actually one of the more interesting stocks we want to talk about in this video. It expires in close to 2 weeks, right? August 1st, 90% decayed out, which means in 2 weeks, we made 90% unrealized gains. So what we want to do here is we either want to close it because there's 2 weeks left and we're only going to get 10%, which is kind of a waste of time, or we roll it out to a later date so that we can get more money. Now, the reason that I'm a little bit more hesitant about rolling out NVIDIA is because right now NVIDIA is at an all-time high or close to an all-time high. It's at $167. If you look at NVIDIA's PE chart, it's currently sitting at 55. And the reason that's a little bit more concerning is because over the last 12 months, it's actually at 50. NVIDIA's never been a cheap stock, but now it's currently a lot more expensive than it was only 3 months ago. So if we did this series 3 months ago, I would have easily told you, roll it up, roll it out. NVIDIA is a great buy at this price point. But now that it's a little bit inflated, we have to think a little bit. Is this a price point? Is this a stock that we're willing to buy 100 shares of if the option drops in the money? So that is what's going through my mind when we're rolling, because as we talked about, having the conviction behind your play is going to be the most important thing. You are going to come up with a situation where the option falls in the money and you're going to be like, oh wait, I actually may not want to let it get assigned. $16,000 is actually a lot of money. Maybe I don't do that. So let's roll this out and just see how much money we can get. So let's assume that we're going to roll it out for a month out, right? So August 22nd. And we'll roll it up to maybe 150. We'll get around $145 for a 2-week roll. That's actually not too bad. What happens if we roll it up to 155? We'll get a 230, which is a 1.5% for around a 3-week roll. That's actually not bad at all. So maybe the right call for us to do here is actually to roll it out to 155, maybe even 160 if you really wanted to, 353. Be very aggressive with it and play before earnings come out on August 27th. Maybe that's the right way to do it. And if NVIDIA continues to go up, then maybe we move on to a different stock. Which brings us to the point. The reason that we're being a little bit more hesitant about selling options, as you can kind of tell from this video, is because VIX is very, very, very low. As we talked about in the masterclass option video, linked again in the upper right-hand corner, we do not want to be selling options when VIX is really low. The reason for that is because when VIX spikes, even if the stock price stays the same, the option price will go up, which means that as option sellers, we will lose money. We want to be selling options when VIX is very high. Back in April, I made a short about it. And we want to be avoiding selling puts down here. And with a lot of macroeconomic situations coming in, like tariff deals coming in at the end of July, interest rate cuts maybe coming in or not coming in, there's probably a lot of macroeconomic situations that's going to elevate VIX to a point where it becomes less productive for us to be selling options. And so this is why I'm actually so hesitant or so careful about selling options right now, because of VIX being as low as it is. Which brings us to the last option in this video, TSM. I haven't made a video about how to sell covered calls. I actually am not that aggressive when I sell covered calls. I just sell more puts than I do quick calls. But the same thing applies to TSMC. TSMC is actually one of my favorite stocks. I have a very long-term bullish sentiment on the stock. As you can tell, it's around 57% of our account. But with TSMC at an all-time high, as well as S&P 500 at an all-time high, there could be a situation here where there's more downside risk than there is upside risk. So the question here is, do I want to sell a covered call on TSMC? Right? I don't really like capping my upside gain in the long term if this is a stock that we want to hold for 5 to 10 years. It's just easier to just keep it. But if you want to kind of swing trade it, wheel it a little bit, then yes, you could theoretically sell a call at this option, at this price point. Now, let's run through this hypothetical. If I wanted to sell an option on TSMC, what I would do is go to the option chain and I would sell a call. And again, let's just do 30 days from today. And TSMC was at a high of 248. So let's just say that I want to sell it at 250, which means that we can get around $320 on this one option, which is actually not that bad. Now the question is, am I willing to part with that stock? And potentially I think maybe yes, because again, it's at an all-time high. We made 30% on it. If it runs up to 250, then we'll be even further up, and I'm probably okay with parting that stock in the money to reduce my risk in case there's a swing to the downside. What we do here is we want to make sure that we're minimizing our risk as much as possible. All of these stocks in our account, with maybe the exception of IoT, are all cash flow positive, all very profitable companies. They're not going to go bankrupt anytime soon. So the risk to the downside is actually very minimal. What we're trying to do is trying to optimize as best we can. Hopefully that was really insightful about the thought process. I try to articulate it as best as I can. If you guys have any questions, please do let me know down in the comment section below. If you guys have any asks or what you guys want to see in a series like this, again, let me know, because I want to make sure that I'm fulfilling what you guys want to see when I give these portfolio updates. If it's helpful, if it's not helpful, because if it's not helpful, then I'll just move on and do something else. Again, I want to make sure that you guys understand the reasoning, the thought process, the risks, especially when it comes to trading options, so that you aren't blindsided when you first start trading options or you continue to trade options. Right? I want to make sure you guys get the full picture. If you guys like content like this, real and transparent, make sure you guys like the video and subscribe to follow along with this account's progress. If you guys want to learn more about selling options, again, I'll link that masterclass in the end screen right here. And I will also link my favorite option strategy, credit spreads, which I will probably do on this account as well, in the end screen here. Like always, stay safe in the market. Until next time, peace.